Regular Insight viewers recognize it right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Today, let's talk about those markets. What is going on?
A lot. What I want to talk about, though, is, since 2006 to 2019, do you think there's any one sector that was kind of always at the top?
I have no idea. I would guess no.
You're right. There hasn't been. So different years, the markets react different ways to different things that are going on in the world and our economy, right? So if you look at a market sector and you're like, oh, technology, which has been a great sector this year. We've done very, very well in technology. But if you were always in technology or heavy in technology, you would see years where that definitely was not the best sector to be in. In fact, this last quarter, it's been consumer discretionaries, materials, and industrials, this third quarter in 2020, that have done the best. And again, it's kind of the game of, well, what sector should I always be in, right? So if you've been in the technology sector, you've seen really great returns this year. If you've been in value stocks and a lot of different value companies, you've probably seen no returns, if not negative returns this year. Why such a swing when you're in the stock market? Most people go, well, I don't understand. If you see a positive 30 on one portfolio and a negative 2 year over year on another portfolio, what is so different? I'm in stocks, right? There are different types of stocks in different sectors of the market. So there's never a sector that's always going to repeat being the best out there. So that's kind of what I want to talk about, because people are starting to get scared with the election coming up, and they're going, what do I do? Where do I go? Where do I go? And again, why did this one do so good and this one's not doing good at all? Again, we talk a lot about putting purpose behind investments and not letting emotional decisions drive us. So you've got a lot of people right now kind of going, maybe I should just get out of the market for the election. We saw back in the last president election, basically the markets went up almost 9% in the first 2 weeks after President Trump got elected. So I tell people, if you're emotionally trying to time the market, a lot of times you'll give up potentially some of the upside, and you may even get into some of the downside of the market. So be careful on emotionally investing, but at the end of the day, diversifying portfolios and then also putting purpose behind the investments. Meaning, if you are one of those value people, maybe your broker has you in a dividend-paying stock portfolio, which again, they've not rebounded very well this year. And you're going, well, I see my growth portfolio, maybe it's my Roth IRA, it made 30%, but this other one only did this much. Switch me. This is the stuff that you start to hear. Switch me. I always want to be in the one that's doing the best. Well, there was purpose potentially behind the one that's maybe a dividend portfolio. You're living off of those dividends. It was geared towards being a dividend portfolio. Therefore, people who are living on the income of the dividends of the stocks in the portfolio. That doesn't mean you should just sell it all and go running into the growth stocks. If you're constantly running to the next thing, you're actually not looking at where things are going. You're looking at what's done good in the past, because if you had looked at that, you would stay heavy in technology this whole year. But again, like I said, this third quarter in 2020
didn't do.
It was other things that did really well. So I tell people, diversify and then have purpose behind the portfolios. If it's an income generating portfolio, let the portfolio do what it's designed to do. If you let emotions get involved, what's going to happen is you're going to get out of the dividend, let's say value companies, small cap, mid cap, and then you're going to go running towards large cap. Well, large cap's already hit its peaks again, right? So you're buying high, selling low, and then what's going to happen is we normally have this inverse effect in the markets where then maybe the next year value stocks tend to do very well. And so now you've went into growth stocks, and now growth stocks flatline, and you might see value stocks do really well, and you continue to do that cycle. So don't let emotion drive your decisions. We are in for some fluctuating markets.
Absolutely.
There is no doubt about it. We will see volatility. That's why you have to be assured that you're investing the right way to begin with, so that you don't let that emotion take over.
It doesn't matter what happens in November. There will be some volatility. That's probably the only thing we know for sure, is that there will be some volatility. You've always said, don't let emotions and don't let fear drive your decisions. Well, if you need some help making decisions, all you have to do is give them a call at Foster Financial. Let them be a second set of eyes. Let them help you out. 234-2200. We'll be right back.